Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video for November 16th, 2023, where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. Let's focus here on the 4-hour chart of the euro versus US dollar. And what we saw in trading earlier this week was the sharp rise to the upside here. That came after the better than expected CPI data that pushed the price above both the 200 and the 100-day moving averages. That's these overlay moving averages on this chart. They come in right above and below the 1.088800 level. So that is going to be a key support going forward, as long as the price can remain above those levels. The longer-term bias remains more to the upside. We did see a corrective move to the downside in the euro versus US dollar yesterday, but that move to the downside fell well short of the 108 level. Looks like the low price came in. Well, the low price over the last few days have come in at 1.0829. So let's call it 30 on the downside before the rotation back to the upside. We did just get initial jobless claims just came in much weaker than expectations. It was higher by 11,000 in the current week, and for the initial jobs claims and continuing claims, that continues to move to the upside, which suggests weakening jobs picture. Is there a crack in the jobs market? We'll see, and that's sending the US dollar lower and the euro versus US dollar higher. The high price, next target comes in at 1.0878. That was these high prices going back to here. Wouldn't necessarily call it all that great of a technical level. Above that would be the highs for the week, which came in above that level, 1.0887. Get above those levels, of course, and we're making a new high for the week. We're extending to the highest level going back to this week back here, which is August of the end of August of 2023, and it opens up the door for potentially the test of this high. That high goes up to 1.0944, and above that the 61.8, 1.095889. So buyers took the price above the 100, 200-day moving average. They're keeping the bullish bias intact here for the euro versus US dollar. We'll see how far this thing can go. Watch the 50% retracement as a close support level now. That level comes in at 1.0861. So be aware of that level. If we can stay above that level, it's more bullish. Let's take a look at the dollar versus yen next. And true to the dollar selling, we're seeing the dollar yen move back to the downside in trading again on Tuesday. The price fell sharply off the CPI. And then we moved down to test the 150 level, got to about 150.04 before rotating to the upside. And really, it really just took off from there. More so than any of the other currencies, we moved back above the 200-hour moving average, which, as you can see, was resistance here and here. Once we moved above it, we came back down and tested it right here and continued to move up to the upside to where we ran into the 100-hour moving average. We did extend above into the close, and in the Asian session, we traded above, Asian and European session, we traded above and below the 100-hour moving average as the price. Trying to figure out which way it wants to go from here. Was it going to go above the 100 or below the 100? The initial jobs claims made that vote to the downside. And as you can see, we are moving back below the 200-hour moving average, which is now a risk-defining level for traders. Stay below 150.94. Keeps the bias more to the downside. We are testing this swing area through here. The swing area goes back in time all the way back to here. We restarted. We had a swing high, broke to the upside, came down toward it, moved to the downside below that level, and then reestablished this area through here, really where the support was found the base, and we started to move to the upside through here. We are back down testing that level, and in trading yesterday, the price did find some resistance against that. Not only was it the 200-hour moving average, but also the swing area. So get below 150.718, and the bias moves more to the downside even more to the downside for the dollar versus yen. Risk, again, is the 200-hour moving average now for traders. Finally, let's take a look at the sterling versus US dollar. And we look at the 4-hour chart for this currency pair as well, as spread it out. And what we've noticed here is this green line represents the 200-day moving average, okay? And in trading earlier this week, the price moved above that 200-day moving average, but fell short of it, the 100-day moving average. That's the blue line. So we battled a little bit in between there, and then fell below this level in trading yesterday, and continued its move down toward this swing area down here near 123.68 before we're getting this boosted in the last few minutes of trading back up toward the 200-day moving average. Again, that comes in at 1.244. Looks like 48 for the 200-day moving average, and there's a swing area as well near that level. You can see where it develops through here, but basically get above the 200-day moving average, and the bias tilts more to the upside. We also near the 200-day moving average is a 38.2% retracement at 1.2458. So you know me. If we get a trend type move to the downside, we need to get and stay above the 38.2% retracement level. We couldn't do it earlier this week, and that contributed to the decline here. We need to get it back above both the 200-day moving average and the 38.2% retracement to prove that the buyers mean business. And so do I. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.